Markets. In fact, Nomura has come up with an interesting note on its strategy on India. They have set a target close to 25,000 for March 2026. And my colleague Hiral is joining us to tell us what their topics are, what is their view on tariffs, and what are they most cautious on.
So it's an interesting day when Nomura has released their strategy report where you have Nifty 50, which has already hit a 24,100 mark in trade. So if you see in terms of their 2026 target, that's March 2026, they are at 24,970, and this they are factoring a 5% cut in terms of the current consensus estimates, which already are on the downward side. Now, they're expecting the FI flows to be supportive. In fact, last week itself, FIs have been buyers, and that is what is supporting the Indian markets. Overall, in terms of the return, -9% to a +7% is what they are looking at in the next 1 year. Now, let's look at the impact in terms of trade tariffs that Nomura is looking at. Firstly, what they are indicating is that India is better prepared as compared to the rest of the world when you talk about the supply chain reallocation that could be happening. So we are at an advantage position. Secondly, the fall in terms of commodity prices as well as in terms of oil prices. These are the two factors that will that will actually benefit India's macro strategy as well. Now, talking about their strategy in terms of earnings, they're seeing downside risks to the current consensus growth and earnings estimates. However, the valuation will find support, and what will give them support is the drop in bond yields. Moving from there on, what is it in terms of their preference? Where are they positive on? Now, Nomura is preferring domestic sectors versus the export-oriented sectors. They're looking at a bottoms-up approach in terms of their investment thesis, and they're saying that we should be avoiding stocks with a high valuation multiple. So the valuations are absolutely key as well on this front. They're positive on financials, relatively low earnings risk, and the present valuation in terms of financials is what is supportive. Consumer staples, discretionary, oil and gas, telecom, power, internet, real estate, and a few domestic healthcare plays are what Nomura is positive on. Now let's understand what they're cautious on. Export-oriented sectors is their cautious list. Capex themes are a cautious play. IT, industrials, cement and metals is somewhere where Nomura is cautious on. In terms of pharma, what they're saying is that they're expecting the tariff impact that will be passed on, and any correction in terms of pharma names should be used as an opportunity to buy in terms of the sector. Let's look at their picks in terms of the large cap space. So it's Axis Bank, ICICI, SBI, Bajaj Finance. These are few of the names that they're looking at. Apart from that, GCPL, L&T, CG Power, RIL, Tata Power. You can see the names that are flashing on your screens as well, which are their topics in the large cap space. Talking about small and mid cap, it's Federal Bank, Marico, Dixon, Uno Minda, GE Vernova, TND, MedPlus, Lupin, et al. So a lot of picks that Nomura has picked up. But clear strategy is domestic-oriented sectors, cautious with regards to export-oriented sectors, and a 24,970 being a target price, which also takes into consideration the earnings estimate cuts that we're already seeing.
Right, Hiral. Thank you for wrapping up that.